Hi, I'm Angie with Producers XL, and I'm here to talk to you today about part 2 of the elements of a good long-term care policy. Now, this is going to be based around the important coverages that we need to talk about with your clients. The first one being home health care, and you may say, that's automatic. I always put that in there. But did you know that today we actually have a standalone facility-only long-term care policy? But why we like to single this out is because what do your clients say to you? I want to go home. I want to be at home. It's called aging in place. So home health care is important, and we want them to realize that long-term care insurance will pay for care at home. The next important coverage I want to talk to you about is inflation. Now, this is really important, but it's also very expensive. On a traditional long-term care contract, we put inflation on our policies because we want it to do exactly what we want our investments to do over time. Grow, grow, grow. Well, that's what inflation is going to do on a long-term care policy, because we don't buy this coverage for today or tomorrow. I didn't buy my policy in hopes that I'd ever need it, but guess what? It's not a matter of if, it's a matter of when. And I know I'm going to need that, but it's going to be sometime in the future. So inflation is going to let those benefits grow over time. Now, on the flip side, on the life insurance with a long-term care rider, inflation's a little bit different. Usually you're not buying an inflation rider on a life insurance policy, and definitely not with a chronic illness rider. So what do we do with that? We increase the death benefit, which means we're going to accelerate out more of a monthly benefit, and that's how you hedge against inflation. The next important coverage is shortened pay options. This means a 10 pay, a single pay. And did you know that there's a long-term care contract out there today, a traditional contract, that allows you to do a single pay and a 10 pay? Now, why would that be important? Namely, to your business owners, because they're planning for their succession and they want this policy paid up before they exit the business. But also, when you pay up a traditional long-term care contract, after you make that last final premium payment, your premiums can never increase. Now, we know on a life insurance contract, you can short pay any life insurance contract, right? 5 pay, 10 pay, 20 pay. It works well in those scenarios. So thanks for joining me, and don't forget to ask your clients about these important areas of coverage.